And as you know, guys, before I begin, I just have to give out a disclaimer that any new opinions, any news, research, prices, analysis, or any information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. My name is Isaac Easy. I am a professional Forex trader with over 10 years of experience, and I'm the founder of Flexi Forex Trading College with over 10,000 students. And over the years, we've held over 300 Forex seminars throughout the Southern African region, in Namibia, in Botswana, in all the neighboring countries. And man, it's been an exciting journey for the past 10 years of my life, educating people like yourself who are interested in knowing about the markets, how they can gain financial liberty through the financial markets. We've had really exciting testimonies. We've had really a lot of people coming in and saying, Isaac, you know what, this is where my life is right now. People buying cars, people buying, closing off their debts, people making serious money in one day, and it's just been an exciting journey to see that I've been part of people's success stories, and I hope that I will be hearing your guys' success as well. I cannot wait to hear you guys saying, Isaac, this is what trading has done for me. This is what I've been able or managed to do with the money that I made from trading. That's what I want to hear you guys talk about. All right. So yes, let's get on to the business of the day. Today we're going to be talking about what Forex trading is, what is traded in the financial markets. We're going to talk about who a Forex brokerage is. We're going to talk about trading platforms, currency pairs. We're going to talk about bid and ask prices. We're going to talk about spread, lot sizes, pips and points, how to create live and demo accounts with ATY markets. So that's what we're going to be talking about. We are coming in as the delay is still quite a lot, but it's all right. So today we're going to be talking about what Forex trading is. All right, now let's get on to the business of the day. I can hear but not see. Oh man, I don't know. Can everybody hear me? Can you guys see me? If you can hear me, say we can hear you. Easy. Say we can hear you, we can see you. I don't know if the network is on my side, but I see also from my side there seems to be quite a lot of delay. Lens, you are so dramatic, eh? I love it. I love it. All right. Okay, let's not waste any more time. All right. What is Forex? What is the fuss about Forex trading? What is the fuss? All right. Forex is a short word for foreign exchange market. So Forex stands for foreign exchange. So the FOR is for foreign and the EX is for exchange, which is usually known as Forex or FX. This is the largest market in the world with a $7.5 trillion daily liquidity. Now, the money that circulates within the Forex market daily, it's about 7.5 to $8 trillion each and every day. That is how much money is circulating within the Forex market. Now, you can imagine how much money that is, and all we want is just a small chunk of that money for ourselves, and that's why we are here as Forex traders, as retail Forex traders. The Forex market is a global decentralized market where the world's currencies change hands. Exchange rates change in seconds, so the market is constantly fluctuating. So if you've ever traveled outside of the country, if you've ever traveled maybe to the United States, if you are well traveled like myself, I was in Zanzibar just a few weeks ago, in Tanzania, and then before then I was in Kenya, and before then I was in Lesotho. If you travel, then you've participated in the Forex market. So when you get to the airport and you get to the bureau or a money exchange and you are taking your rands and you are changing them to the dollar, you are changing them to the shilling, or you are changing them to the dirhams or wherever, whatever currency of that country that you are visiting in, you are doing what we call foreign exchange. You are changing one currency for another. Does that make sense? That is what forex trading or forex is. Foreign exchange is the forex market. Now, what we do as forex traders, we are not really changing one currency for another. Rather, we are speculating on the price of those currencies that gets exchanged. Does that make sense? So we will take the rand, for instance, and put it against the dollar, and then we will then speculate whether the dollar will rise in price against the rand or the rand will rise in price against the dollar. That's what we do. We speculate on the exchange price or the exchange rate of these currencies. All right. Now, it's important to know that because this is a global market, the markets are open 24 hours a day, 5 days a week. That is the forex market. Now, we also have what we call the cryptocurrency market, which is open 24/7. Even on weekends, you can trade the crypto exchange market. But we are trading the forex market, so it's open Monday to Friday. So Sunday midnight it opens and Friday midnight it closes. Gives you time to spend time with your family during the weekend. All right. Is that clear? Do you guys understand what forex trading is about? And what is traded in the market? We trade currencies, we trade commodities, and we trade cryptocurrencies, we trade stocks, we trade futures, we trade. There's so many things that are traded within the forex market, but mainly currencies, commodities, and cryptocurrencies, as well as stocks. Are you guys with me? Are we good? All right. It appears that people are understanding. So you guys have a clear understanding of what the forex market is, right? If you do understand, let me see some fire emojis in the comment section. Let me see some dollar emojis in the comment section to say, yes sir, we do understand what the forex market is about. Okay, so next time, make sure that you get a passport, okay? Make sure that you get a passport. So next time you're traveling outside the country, you can say, hey, I trade online and offline. It's really a good feeling when you get to the bureau de change and you are giving them your money and they're exchanging it for another currency. It's like, oh, I'm participating in offline trading, not in online trading. Now, the best part is if you went to that country because of online trading. Online trading puts you in a place where you're able to do offline trading. Isn't that cool? That's amazing, guys. All right. Okay, cool. Now that we understand what the forex market is, we need to understand who a forex broker is and why is it important. Now, let me give you a bit of history so you can have understanding. All right. So back in the day, back about maybe 100 years ago, the forex market was only accessible to rich people and big financial institutions. It was not open to the public, all right? And the reason for that was the barrier for entry, because you needed a lot of money, all right? You needed a lot of money in order for you to participate in the foreign exchange market. Now, what then happened a couple of years later was that they wanted to give out a platform to people like you and I so we can participate in the market. But there was a problem. The problem was we did not have the money in order to access the market, because you needed billions and billions and millions of dollars in order for you to access the market. So now we did not have that type of money. So what then happened is they came up with what we call a forex brokerage. Now, a forex brokerage broker is literally the middleman between you and the market, between us and the market. Because we don't have the funds to access the market, we can now access the market through the broker. So that means the broker is acting as the middleman between us and the market. All right. A forex broker is the link between a trader and a network of banks that have access to forex liquidity. Now, I want to bring you into understanding about who are the forex participants, who participates in the Forex market? Are you guys still with me? Who participates in the Forex market? All right. Who participates in the Forex market? You can see financial market participants. We have governments. The government participates in the Forex market. Those who said the Forex market is a scam, what do you say now? Because your government, each and every country's government participates in the Forex market. That's why when you open the news every single day, they'll be telling you about what the dollar is trading against the rand, what gold is trading against, what is the price for oil and all of that. That is the financial market. Who else participates in the market? Central banks, the big banks, the banks that you know, your FNB, your who banks with FNB here? Who banks with FNB here? If you bank with FNB, please let me know. If you bank with FNB, let me know in the comment section. I want you to log into your FNB app and search for Forex and tell me if you don't see the word Forex. Now, are you going to tell me that FNB is also a scam? Did you know that you can trade Forex on your FNB app? Did you know that? Did you know that you can invest in foreign exchange on your FNB app or any other bank? Did you know that? Log into your bank right now. You see, Nicole says it's there. Now tell me, is FNB a scam? You see that the banks, they do participate in the Forex market. Now, when you put your money into the bank and you say, I am investing in a whatever account that you're investing in, they say you'll get your money in 10 years or 5 years or whatever with so much interest. Where do you think they get that interest from? Where do you think, when you are investing with a bank or any other investment company, where do you think they get that money that they pay you out with? Where do you think they get the money? Who can tell me? Where, if you're investing your money with Old Mutual or Investec or any other investment institution, can you tell me, if they say we'll give you a 7% return per year, per annum, where are they getting that 7%? Who can tell me here? All right. Does anyone know where they get the money? Still delayed a bit. Just give it a bit of time. Someone is saying from the Forex market, some saying from other people. No, they get it from the financial markets. They use the system of the OPE, other people's money, to go into the financial markets to make money so they can pay you the 7%. They are trading with your money. Yes, that's correct. They are trading in the financial markets. They are trading big monies and they are making big returns, and they give you 7% a year. But then people would say, no, the Forex market is a scam. No, it's not. It's the biggest, the largest financial markets in the world. So big banks, as I said, your commercial banks, also corporations like your investment firms, institutional traders, retail traders is you and I. This is the guys that are trading at home. We are called retail traders. And of course, there's brokers and there's also market makers. All right. So a Forex broker gives you access to foreign exchange trading and provides support functions for you. So in order for you to be able to access the market, you need a Forex brokerage, because we don't have those millions and billions of dollars to access the market directly. So we need a middleman to act on behalf of us when we are trading. So when I trade with ATY markets, the ATY market executes the trade in the real market. Does that make sense? And when I make money, ATY markets pays me because they get it from the real markets. All right. And ATY markets will charge me what we call a spread or commission in order for them to execute that trade for me. Does that make sense? So that's what a Forex brokerage is. In simple terms, a Forex broker is literally just the middleman between you and the financial markets. Are we good? And the reason why we recommend ATY markets, one is because low spreads. What are spreads? I'll explain to you in the next chapter. Spreads are literally the commissions that you get charged to what do you call? You get charged to trade. Okay. High trading execution speed, no deposit or withdrawal fee. So unlike your bank, we don't charge you to withdraw. You don't get charged to withdraw or to deposit. If you're depositing money in this bank, they charge you to put in the money, they charge you to keep the money, they charge you to take out the money. Oh man. Hey, yeah, ne? Talk. Hey, let me not even say it. All right. There's local transfer. There's also promotions and bonuses. As you guys know, I told you guys we have a 200% bonus where if you're funding your account with 1,000 rands or whatever amount, you will get 200% of that as well. All right, do you guys understand? And someone saying Capitec, yes, all the banks. I just said FNB because I know their Forex thing is right in your eyes. All right, can we move on? I'm not gonna do this practical because we've already done it in the past 2 days. Are we good? You guys do understand what a Forex broker is? Hey man, the delay is too much, eh? Because it's also on ultra low latency, so I don't know why. All right, let's move on. All right, now what is MT5? What is MT5? MT5 trading terminal is a trader's workplace. All right, the platform allows you to work in the financial markets, Forex, CFD, and futures. With the help of the terminal, traders can analyze the dynamics of financial instruments, make trades, create and use automated trading programs. All right, MT5 is the embodiment of all-in-one concept. It is also the most popular trading terminal in the world. Now, MT5 or MT4, so we have MT4 and MT5, which is a product of a company called Metacodes, which is a Russian company. They're from Russia. They created this popular trading platform. This is now like the traders' workplace. This is your office as a trader. This is where you do everything. You analyze here, you manage your trades here, you open, you close your trades here, you monitor them here on the MT5 platform. It is not the only one, but it is the most popular one. We have other ones like C Trader and so forth, but this one is the most popular one and the most recommended one. All right, so make sure that you go onto your App Store or your Google Play Store and download the MetaTrader app, the MetaTrader 5. There's 4 and 5. 5 is the newest one. MT4 is the old one. All right, make sure that you download it and make sure it is the one from Metacodes. Make sure it is the one from Metacodes. All right, are you guys with me? All right, now I'm not gonna do that because we've done it in the past 2 days. If you're not here in the past 2 days, the videos are here on our YouTube channel. You can go and watch them again. All right, and make sure that you are subscribed to this channel. Make sure that you turn the notification button on so that when we go live, you can go live with us and learn. All right, but if you miss it, you can always get it here again in the channel. All right, now, so we also have what we call actually currency pairs. This should have been, let me do this quickly and move that. This should have been there. All right, there we go. Let's do that quickly. All right, so we have, what do we trade in the markets? We trade what we call currency pairs. We don't trade currencies per se, but currency pairs. All right. A currency pair is the quotation of two different currencies with the value of one currency being quoted against another. So now we are going to take the South African rand and the dollar and we put them together. We call them a pair because they are paired together. So you don't trade one currency as one, but you trade them in pairs because there needs to be a quote or an exchange rate between those two currencies. Does that make sense? So we have the dollar and we have the rand. All right. So now what we're going to do is we put them together and we call it USD ZAR. So the United States dollar against the South African rand. Now with a currency pair, we have what we call a base currency. We also have what we call a quote currency. All right. The base currency is the first currency in a currency pair. It is also known as the transaction currency. The base currency, I usually say the base currency is the strongest currency. So like in our example of the dollar, the American dollar and the South African rand, the dollar is always stronger than the rand, or it's more powerful than the rand. So it will be the dollar then the rand. The dollar will be our base currency. All right. The quote currency is the second currency in a currency pair. It is also called the counter currency. Now think of it this way, right? We have the base, we have the quote, and what we are trading is the price of the two. What we're saying in Forex is say it takes one of the base currency to buy this much of the quote currency. It takes one of the base currency to buy this much of the quote currency. Write it in the comment section. It takes one of the base currency to buy X of the quote currency. So in our example of the dollar and the rand, so it will take $1 to buy 18 rands. $1 to buy 18 rands, or vice versa. It will take 18 rands to buy $1. It will take X of the quote currency to buy one of the base currency. Does that make sense? We speculate on that price. I don't want to use the word predict, but we speculate. We speculate what that price of the quote currency is going to be. And if we believe it's going to be higher, we buy the currency pair. If we believe it's going to fall, we sell the currency pair. It's the concept of buying high, buying low and selling high. Yes, I see. It takes the base currency to buy. No. It takes one base currency to buy X quote currency. It takes one base currency to buy X. So in the example of the dollar and the rand, it takes $1 to buy 18 rands, or it takes 18 rands to buy $1. That's the concept of currency pairs. All right. So it says the bid price attached to a currency pair tells you the amount of the quote currency you will need to buy one base. The base currency is always greater than the quote currency, as I already explained. You guys understand what currency pairs are? All right, let's move on. All right. So why traders? So we also have what we call major currencies. We also have what we call minor currency pairs. So we have major currency pairs and we have minor currency pairs. And why most traders prefer the major currency pairs is because the major currency pairs on the Forex market are heavily traded pairs in the world. All right. So, and the major currencies that we're talking about is the Euro currency pair, is the Euro USD, the USD JPY, the GBP USD, and the USD CHF. So that's the Euro. As you can see, the Euro and the dollar, the United States dollar, is the United States dollar against the Japanese yen, is the Great British Pound against the United States dollar, and we have the dollar against the Swiss franc, the Switzerland franc. All right, they have a large volume, that's why their spread are also smaller, and I said I'll explain to you what spreads are, but these are the most traded currencies in the world. All right, and the Euro USD is the most heavily traded currency pair in the world. So the euro and the dollar is the most traded pair in the world. All right. Are you guys with me? So we have major pairs, we have minor pairs. Major pairs and minor pairs. Oh, I see the delay is horrible. I don't know what the issue is. Let's see something here. Do apologize, guys, for that delay. I don't know what is going on. I do not know what is going on. I see it's blurry. Can you guys see me? I see it's a bit blurry. It gets blurry from time to time. All right, let's move on. All right, so here's an example, as I said, of a base currency and a code currency. So we have the base, which is the euro, the code, which is the dollar, and same here we have the Australian dollar and the Japanese yen. All right, and it takes 83.55 of the Japanese yen to buy 1 Australian dollar. Okay, and we have examples of currency pairs here, and these are the popular currencies. So we have the euro, we have the dollar, the United States dollar, we have the New Zealand dollar, we have the Australian dollar, the Great British Pound, the Canadian dollar, the Swiss franc, the Japanese yen, and the South African rand. These are the abbreviations. I see people are saying the internet connection is bad. All right, please bear with me. At the end of this session, I will upload another video where it is clear, so you guys can also join on that as well. All right, because we are recording this session. All right, and the currency pairs here, you can see them. You can take a screenshot of those as well. All right. Adding, so I will not do this again today. We will do a practical training of MetaTrader alone. All right, so we have what we call the bid and the ask price. The bid and the ask price. The bid represents the price at which the forex broker is willing to buy from you the base currency in exchange for the code currency. The bid price is the trader's selling price. So in this example, if you are selling the United States dollar against the rand, which is the USD ZAR, let's say it's sitting at 18 rand 10 cents. All right, the bid price, or what you get charged, you maybe get charged 18 rand 12 cents. So that difference of the 2 cents is what we call the spread. All right, is what we call the spread. That's what the broker charges you in order for you to execute that trade. All right, does that make sense? And secondly, we have what we call the ask price. The ask price it's the price at which the forex broker is willing to sell to you the base currency in exchange of the code currency. The ask price is the trader's buying price. So in the same example, if I'm buying the United States dollar against the South African rand, that means, and it's sitting at 18 rand 10 cent, I will buy it maybe at 18 rand 8 cents, because that difference of $2, what we call the ask price, I buy it at a lower price a bit because they are charging me more. Does that make sense? Does it make sense? I hope it makes sense. And we are just delayed because of them. So it will be sitting at 18 rand 10 cent, and then you'll buy it somewhere here. All right, so we'll just charge you more. Just a bit. All right, so that you can execute that trade. So it's here the price, and then you buy it just slightly above. So it can be a 10 cent, then you buy it at 12, or if it's selling, it's here, the price is here, and you sell it just a bit here for a higher price than what it is. And that's what we call the spread, the difference between the bid and the ask price, what the actual instrument costs and what the broker charges you to execute that particular trade. All right. Please explain again. So the bid represents the price at which so remember, you cannot access the market on your own. So you need the middleman. Now also the middleman needs to make money. It needs to make commission. All right. So how do they make their commission? When you are executing a trade, they will charge you a small commission for you to execute that particular trade. Now, we have what we call the bid price and the ask price. The bid price is where is your selling price. So the broker sells you that particular pair at that particular price. So if it costs 18 rand, maybe let's say they charge you 18 rand 2 cents for you to be able to execute that sell. Does it make sense? So but you don't have to stress yourself too much about this. You'll see it when you open your MetaTrader. You will start seeing the bid and the ask price, and that's what we call the spreads. All right, and the ask price is the trader's buying price. So there is the actual price of that particular currency pair, but there's also the price that you buy it from. All right, and that's what we call the ask price. So this is how much the broker is willing to sell to you that particular instrument. All right. So you will see it here on your MetaTrader. So you'll see that there's the ask price and there's the bid price. So if you are selling, you will sell at the bid price. If you are buying, you will buy at the ask price. All right, you see that, like for instance, the buy price is sitting at 1.36301, but the sell price is sitting at 1.36298. So if two people are executing, either one is executing a buy, another one is executing a sell, the price won't be the same. So if you are buying, the price is different. If you are selling, the price is different. And that difference there is what we call the spread. And that's what the broker charges you in order for you to execute that particular trade. All right. Spread is the difference between the bid, the sell price, and the ask price of an instrument, as I explained to you. That's what we call the spread. All right. Makes sense? Can we move on? We understand bid and ask. Can we move on to lot size? Lot sizes. Now this is very, very crucial. Very, very crucial. How and why is it crucial? Oh, I hate what gold did to me today. I hate it. Hate it with a passion. Hate it. Daddy. Lot size. Oh man, the delay is ridiculous. 5 minutes. That's horrible. Just wait for people to catch on. But as I wait, there's also gonna be a delay. But okay, let me just move on and explain. So I'll try and be slow. So what are lot sizes? Lot size is the amount or quantity of a trade that you buy or sell. It's sometimes called your position size or your trade size. All right. A lot size is the amount or quantity of a trade that you buy or sell. It's sometimes called your position size or your trade size. So we have different types of lot sizes. So in essence, a lot size is the risk that you are putting on when you're taking a trade. You decide the lot size, and the lot size determines what your risk is. All right. And it will also determine how much you are going to make. So we can take the same trades with different lot sizes. The higher the lot size, the more money you make or the more money you lose. The lower the lot size, the lower the money you made and the lower the money you use. And I show you guys here that we have different types of lot size. We have the standard lot, the mini lot, and the micro lot. Now, as a beginner, you need to use the micro lot, and it's a representation. So when you are taking a trade and you see where it says lot size, you need to use a micro lot, which is a 0.01. all right. And then a mini lot is represented by a 0.10, and a standard lot is represented by a 1.0. all right. And here it shows you the value per pip, especially on a Euro USD. So a 0.01 for every pip will be about 10 cents in dollars. A 0.10 will be about $1, depending on the instrument that you are trading, and a standard lot will be about $10 per lot size. all right, or per pip, per pip. all right. So lot size is literally the risk, or rather the quantity of the trade that you are buying or selling. So when you are taking a trade, you determine how much of your capital you are risking per trade, but you determine that by the lot size that you use. all right. So this is literally just a measuring unit of how much, because you don't put in to say I'm going to risk 100 rands in terms of determining the risk, or I'm placing 100 rands on this particular trade. That is represented by lot sizes. I hope I'm making sense, and I hope I've simplified it as much as I can. And I try to not use Forex jargon. So the lot size have nothing to do with spreads. Yes, that's correct. It has nothing to do with spreads. Spreads is something totally different on its own. all right. And so the spreads, the lot size won't affect the spread. The spread is raw and it's fixed, whether you're using a 0.10 or a standard lot. The spread will be the same in terms of the bid and the ask price. all right. So the lot size has to do with the trade that you are taking at that particular moment. How much are you risking? You determine that by the lot size that you are using. Oh man, I hope you guys do understand me. all right. You determine that by the lot size you are using. As I said, the lower the lot size, the less money you make. The higher the lot size, the more money you make. But also vice versa, the more you make or the more you lose, because remember, trading is a double-edged sword. If you don't know what you are doing, it gets bad. all right. Pips and points. What are pips? I just spoke now about pips, value per pip. Now I'm going to explain to you what a pip is. A pip is which is known as a percentage in point or price interest point. It represents a measure of the change or movement in a currency pair. It is represented by a single digit move in the fourth decimal place in a typical Forex code. Now let me simplify that for you. What is a pip? A pip in simple terms is a measuring unit of currency pairs. We measure distance by meters and kilometers. We measure volume by cubic meters. We measure height by, I guess it is height. We measure space by square meters and so forth. Is it mass? We measure mass by square meters and so forth. We measure currency pairs by pips. So when the dollar against the rand moves from 18 rand to 19 rand, we don't say it moved 1 rand. We say it moved X amount of pips. 100 pips or a 10 pips move. You get what I'm saying? So When I say pips, it's literally just a measuring unit of measuring price. All right. So, how do I explain it? So we have points and we have pips, and a point is literally just a tenth of a pip, right? So 1 pip is equals to 10 points. So if price has moved 10 points, all right, okay, let me actually do this. So let's do a practical so it makes a bit of sense. Oh, what trading did to me today. I don't like it what gold did to me today. I'm just opening up the MetaTrader so I can show you guys. Can show you guys pips and points. Why is it taking forever? Oh, I can't wait for you guys to start experiencing real trading from next week. Okay. Okay, there we go. Yeah, man. So let's go to, so you see price over here, right? You see price over here, it's moving. So how you calculate, remember I said pips is points. It's points is 1/10 of a pip. So if price moves 10 points, it has moved 1 pip. So I'm gonna drag this here. You see that it says price has moved 522 points. Do you see where that says 522 points? So that means price has moved 52 pips. It has moved 522 points. It's 52 pips. So you just divide that by 10. Does that make sense? So we don't say it has moved 1.3, 1, 2, 3, 4. No, it moves with pips. So from here to there, it's about 750 points. So that's about 75 pips. So we have measured that the move from this point there to that point is 75 points. And we can say from here at the top to the lowest, that's about 2,600 points. So that's about 260 pips. So price moved from that high to that low, it moved 260 pips. So as I said, it's just a measuring unit of measuring the price movement. Okay. Oh, this thing is horrible, man. Oh man. All right, so we now understand pips and points. All right, so as I said, a point is just 1/10 of a pip. 1 pip is equals to 10 points, 20 pips, 200 points, and so forth. All right, so pips and points. How to calculate pips, I just showed you guys now, but in theory is literally, as I said, you start calculating from the fourth digit after the decimal point. The decimal point is the comma or that what you call the comma or the dot or whatever you want to call it, but the decimal point. So for example, on the euro and the Canadian dollar, if price is 1.4705, if price increases by 10 pips in value, we say 1.4705 plus 0.0010, then it will be 1.4715. So the difference between that and that is 10 pips, right? We don't call it by the currency pair or whatever, we call them pips. And if it decreases, the same thing applies, it will be 4695. So that minus 10 pips is 1.4695. All right. On the JPY pairs, that means the Japanese pairs, anything that involves the Japanese yen, you calculate from the second digit after the decimal point. So on the typical currency pairs, it will be from the fourth digit. On Japanese yen, it will be from the second digit. So we have the Great British Pound and the Japanese yen. You can see it says 153.20. If it's added by 10 pips, it will be 153.20 plus 10, which will be 153.30. And if you minus, same thing. All right. And then on metals like gold, you start calculating from the first digit after the decimal point. So immediately after the decimal point, whatever movement that make, that is the pip. So like for instance on gold, if gold, can't see you, where are you pointing? Oh my God. If where are we now? Okay guys, please bear with me. I'm going to upload the high quality of this video immediately after this session. Okay, I'll upload the high quality so you guys can see. All right, so as I said, on metals like gold, silver and so forth, it's start calculating from the first digit after the decimal point. So that means immediately after the decimal point, it's you start counting whatever moves it make, you count the pips from there. So if it moves 5 points after the decimal point, it means it has moved 5 pips. All right, that's it regarding pips. All right, I'm not gonna do the Q&A because of the issues that we are having with connection, but the next session we're gonna have, not tomorrow. Tomorrow I am traveling, so we'll have a session on Monday. We're gonna discuss the advantages of Forex, trading sessions, when to trade Forex. We're going to discuss Forex terminology. We're going to discuss leverage, take profits, and stop losses. All right. I do apologize for the issues with our network. We'll make sure that next time it is sorted. But as I said, immediately after this session, I am going to upload a high quality version of this webinar. All right, guys, that will be it from me, guys. Let me just say a short prayer before we close. Heavenly Father, in the name of Jesus Christ of Nazareth, we thank you for this day. Heavenly Father, even though there were disturbances, we trust and believe that all things work together for good for those that love you and are called according to your purpose. We thank you